Market Technicals Morning Call video for Friday, July the 12th. Well, the pre-market gains held pretty much most of the day due to the Bernanke comments on Thursday evening. Markets did rally, Dow up 169, Nasdaq up 57, S&P up 22, and the Russell continues making all-time highs at up 12.5. And most of the gains were in the pre-market session, so when the markets did gap up, they pretty much held their gains and went sideways all day. So it was a very benign day, believe it or not. Despite the fact that we were up green, markets were sideways pretty much most of the day until the end of the day, where the shorts continue to cover. Now, I do feel that this is an induced short covering rally. No question about it. I do think that the shorts are scrambling right now due to the fact that Bernanke just basically flip-flopped his comments from being hawkish or slightly hawkish to quite dovish, actually, which kind of puzzles me as well. But nonetheless, the markets are running up, and we are getting into an overbought state now. So this is the next couple of days is really, and I mentioned this a couple of days ago, usually when you have FOMC minutes or a Bernanke statement, you really need to let the dust settle and see where everything's are. Because right now, the main market participants who are chasing are going to be retail. They're not the funds and the fund managers. They're not buying at these levels. They're waiting for pullbacks to buy, or something that's going to be a decent pullback that they could start building new positions on and or adjusting old ones. So I do think that this still is a short covering rally, but nonetheless the market continues to rally. That's why I said if you're looking to short, look for an area to short, and then you need a trigger. If that does not trigger, and I'll show you in a chart, you're not going to just blindly just short the market, and you can't. It's not the way the markets have been lately. You just cannot do so. It's like running into a freight train. So I want to run into the charts. I got a few indicators this weekend. I'm going to put in put a real big big picture, so to speak, if you will, just to see where we are. I haven't done that in a couple of weeks, so I want to show you where we are and where we could be headed in weeks to come. Now, I still think that the markets will probably at one point between now and the end of the summer give us some sort of a decent sell-off where you can really start adding to your existing long positions or start to dabble in some long positions heading into the fall period. Remember, you do have weakness that comes in at sometime between now and the summer, and then you have it again sometime in October, September-ish, late September, October, and maybe even into November, and then you get that market push high going into the end of the year and following part of the beginning of the new year. So just keep that in mind if you're looking to, for the long-term players that are looking to actually get into the market and start adding positions. Okay, so the McClellan Oscillator, excellent, reliable indicator, as we all know. We are now officially in overbought territory. That does not mean that we want to sell the market, right? When we have a big move like this on Thursday, I'm expecting to sideways to grinding slightly higher and or even pulling back slightly, but nothing really. I don't see the market selling off today. I don't see there's any reason for it to sell off today. Markets are higher. The markets actually have been up almost 12 days in a row where we had 4 days of decline. So go figure, right? Buying of dips are actually in full swing, as you can see, and I'll show that to you in the charts again. But we are in overbought state. I think that we can gap up one day and really run hard. You could actually get a good short entry in the market, but we're still into this Bollinger Band here, as you can see. So I wouldn't look to short the market just yet. Take a look at the VIX. As you see, the VIX here down below and has not broken down below the Bollinger Band. So I think the VIX is probably going to be headed to this area again, right up in here around 12, 12 and a half. And then let's see if we can actually get, if we can break out of the Bollinger Band and then close back in, that's going to be a buy signal for the VIX, a sell signal for equity. So we'll just keep an eye on that. But again, pretty much a subdued day yesterday, despite the fact that we had, of course, all of those gains were all pre-market gains. Here's the euro, big push up, held this neckline, and this is the area here where it's going to need to prove itself, right? We're coming into these areas of resistance. We got the 8, the 20, the 50, and we actually popped above the 200 and the 50, and now we're sitting on the 20. Now, usually, what I would like to see is if this market can get it to the 131-ish, 131 and a half, 132, and then we're going to be looking the next few days if the euro starts to fail, right? If the euro starts to break down again, you're going to get, at the very least, a test of the 128, okay? Now, why that's going to happen is we need to see what the dollar does. and here's the U.S. dollar. A lot of the analysis is really built around the dollar, and you should be doing the same. You have the 20, you have the 50 to 20, you have the 200 way down here, and of course you have your 8-week momentum average. Now we have a 2-day breakdown basically from Thursday, Bernanke's comments, and of course follow through from Friday. So where do we go from here? Well, we're coming into some good support at 81.33. And of course, $82 is a little cluster area of support. So even if we do break down here, I do think the dollar continues to rally, though. I think the relationships will change, and that the dollar will rally with equities at one point. Right now, it's not; it's inversely correlated. So we want to keep an eye on what the dollar does. If the dollar does catch a little bit of a bid here, and starts to roll up, and then we get a 1 or 2 day push higher, then I think that the dollar could actually start to move higher. It's tricky because what's going to happen here, if the dollar pulls up 2 days, it's really going to create some sort of a bear flag here. And again, this is just based on assumption. Nothing has happened yet. So the dollar will basically make a 2-day run, 3-day run, and create some sort of a bear flag. And then we need to see if this is actually a bear flag, or is it just a bounce up and then we start to correct again and move higher. So that's going to be interesting what's going to happen next 2 days, today, Monday, Tuesday, and see where the dollar does. If the dollar can consolidate here, which I would rather see instead of bouncing up, I'd rather see it consolidate for a couple of days and then put in some sort of a base and then break out of that base, then I'd feel more comfortable saying the dollar is going to probably take out these local highs here at 84.96. So that's what I'm looking at right now as far as the dollar and the indicators. As far as the indexes, let's run right into it. CCI actually picked up pretty well, so we do have a little bit of momentum now, regained momentum actually. Now, I would not be chasing longs here. If you are looking to add to your long position or your portfolio, now is not the time. If anything, what I'd like to see for the longer term investor is literally catch that uptrend channel, that continuation uptrend channel from November. Hit that and then look to start nibbling here and maybe even back here again if you get it. Now, the high is 1687. Now, we're at 1675. We closed at 02. So I think we're going to at the very least test the highs and maybe even get to 1700, 1710. That's going to be the next upside target. Remember, guys, we are still in an uptrend, and even this move lower still bode well to be that we would be in an uptrend, and that is exactly what it is. That's why I'd like to see. I would have liked to see a break lower, and then a choppy move high, and then a break down again. Then you could say that we had a trend shift. Now, we did have a little bit of a trend shift, a short-term trend shift, when Bernanke was making these comments back here at the end of May, and we did kind of drifted lower. We were up a couple of days, and then we had that big flush for 3 days, and then all of a sudden that was the end of it, and the markets moved higher. So I would not be looking to chase. If you're looking, I would be looking for decent pullbacks into support or into a moving average cluster or somewhere into a fib cluster, a base, and then I'd be looking to buy that. I would not be looking to chase up here. Again, this is an induced short covering, so I would not be looking to do so. So here was where my spot was. I said, okay, right in between here, like 166, 160, let's call it 165, 165.80. Right now, the area is where I wanted to get short. Now, obviously, if you take a look at this is not the case anymore, right? Because we did not get that reversal candle and we have broke higher. So I'm going to remove that, and now we're going to be looking for some new targets, and we'll simply just do that by looking at, okay, well, we need to see where this market is headed. And here's where excuse me, here's where I really don't like the way these candles have reacted. And look at it, all little spinning tops, little doji candles, nothing really big, nothing exciting like large engulfing candles like this. And look what we have here. We just got a big hammer up in this area here. Okay, we do have a lot of the push up higher, but this is not really exciting to me. So although the markets did gap up, if you notice though, they gapped up and stayed in the range, gapped up, stayed in the range, gapped up, and then pushed up higher here at the end of the day. So obviously this is definitely to me a short covering rally, but nonetheless, if you're short, you're in a lot of pain. So let's see where the market is headed here now. We got another, we don't really have too much more here, another $1.50 in the equity markets are going to at least test the highs here in the spiders. Okay, same thing here with the diamonds. Diamonds actually roll back up again, and again now we're outside that Bollinger Band. We are overbought again in our indicators. So again, overbought is not a sell signal, guys, but just something to use caution, tighten up stops if you're long, and if you're not, maybe one more big push up, you could probably fade that push. Here is the IYT. Transports here doing okay. Still within this downtrend line, so we're still hugging this right about there. We're still underneath that downtrend line, and now we need to really break back above it and start taking out the highs here. But again, I'm going to get rid of this. These are the head and shoulders pattern that we actually had, and we were good. We actually met our target here, and now we're just looking to get back up again. So transport's holding in, doing well. Our leader. Russell on fire. That's all I can tell you. Russell is on fire, and we are overboard, guys. But look at the volume. Volume has been really muted on this big last push higher that's making all-time highs. So that's a bit of a concern to me. But if you're long Russell from here, obviously you're doing well. So here is something that I'm going to be really watching closely the next couple of days if Russell succumbs to some selling, and that's interesting to see what happens. And now remember, here is that last push up and created a doji. Indecision. So this is something that if we could take out 101.60 on that little move lower, I would say at least a retest of the old highs is in order. And let's take a look at Goldman Sachs. Did break up. Goldman's been really weak lately, despite the move higher. And although yields have been rising, Goldman really hasn't been the market leader. Now watch, we have earnings today from Wells Fargo and J.P. Morgan, so that's going to be interesting. That'll really move the markets, guys, and especially the banks as well. Okay, and of course we have XLF, same thing. We are actually above our little downtrend channel here. We're making a move higher, and we're just getting outside the Bollinger Bands. And Apple, lastly, Apple's actually been doing pretty well. I'm surprised. We did catch that 410, and we moved higher. Now, the big move is going to be 435. If we can get above 435, which is going to be the 50-day moving average, and consolidate for 3 or 4 days, I think you're going to have a good shot of taking a move higher up to that 470 test. Okay, but again, we need to consolidate a little bit before we move higher. I wouldn't want to see anybody looking to get long here. And here's the Qs, broke out again. Look at this. All Qs made all-time highs, and we are really now outside the Bollinger Band here. Logitech did well. Clack, Microsoft, Cisco, they all did well. So they're moving higher, which is what you want to see in any kind of rallies. Again, I do think the longer-term picture is going to be really good for equities, and that's because we have the Fed, accommodation of the Fed. So if Bernanke, I guess he figures that, you know what, let me talk back the markets up. I'm leaving in January, and I really don't care what's going on. So I'm sure he can't wait to get out of his position. But anyway, to me, guys, I think this is a very, very dangerous market if you don't know what you're doing. So if you are new to the game, I would definitely reduce your share size, take a step back, and look to see what happens. If you are a seasoned pro, well, obviously you know what to do. Just I would still be reducing share size and risk, and just see where this market happens. I would not be looking to chase anything. Remember, when the markets do go up, they eventually come down, and vice versa. So just keep a nimble mind, be nimble in itself, and just kind of let the markets come to you. If you don't see anything, remember, cash is always a position. All right, guys, have a great weekend. Enjoy the weekend, and we will speak to you on Monday. Take care.